This year has been very successful for Apple. The company closed the financial year with a 33% revenue growth. The company has not shown such growth rates for years. Therefore, the growth of the company's shares by a comparable 30% for the year looks quite justified. This year was very successful for other big tech companies. Google, Microsoft, these companies were the main beneficiaries of the situation in the world, I mean lockdowns and excessive stimulation of the economy. And the revenue from both the products and the services increased, but it's unlikely that Apple will be able to repeat the success next year. Apple reduced production of its new phone due to the global electronic chip crisis. This crisis might be temporary, and in a year or two it might be solved, but there is another problem for Apple: the decline in demand during the sales season. The last quarter of a year is always the best quarter for Apple. Usually it's the main sales season, and it's notable if you look at the quarterly net income spikes. And the reasons for the decline in demand for Apple products can be different. Someone might be saving money because inflation is rising and their wages are not. Someone may be thinking that innovations in the last iPhone models aren't enough to spend money for the new models. Another important thing I want to mention is that Apple spends tons of money on buybacks. The number of shares outstanding since 2013 decreased by almost 40%. So when you buy Apple's shares, the part of the business that you buy is growing, and you're also receiving reliable dividends. That's surely good for investors, but the fact that the company spends that much money on buybacks and dividends usually leads to the point that the company also has large debt to serve. And if you look at the debt-to-equity ratio for Apple, it's almost 2, which means Apple is vulnerable to key rate increase. And Federal Reserve recently confirmed that key rate may be increased next year, so that's just another risk for Apple. I mean, surely it doesn't mean that something critically bad will happen to Apple. No, nothing critically bad will happen to Apple. It's not like Boeing that spent all money on buybacks and dividends and then almost turned it into a zombie company. So the forecasts for Apple aren't so great. And there is another risk no one is talking about. China makes up about 20% of companies' operating income and net sales. Moreover, it's the region where the revenue grows the most. So in case if there would be another tension between America and China, and America will impose some serious sanctions against China, China can respond and damage Apple a lot. This may have a serious impact on a company's growing dynamic as well. I should mention that Apple targets 2025 to launch self-driving cars without steering wheel. Very hard to say how this will end up if the company that never produced cars will start to produce them and compete with companies that have experience in designing and selling cars, considering how hard to make the automotive business profitable. Well, we will see how things will turn out. But hey, I said too much negativity about Apple. Nothing critical bad will happen to this company. If I were an investor, I would keep holding the stocks, but probably not buying it right now. There's just more interesting companies to invest. That's all for today. Thank you for listening. Tell in the comments if you have Apple stocks.